Hi, this is Yuri Tsihus and welcome to the weekly report from FIBO Group. This week's trading will be filled with important economic data. On Monday, traders will closely monitor the output of statistical index of business activity in Japan, Italy and United Kingdom. On Tuesday will be the interest rate decision from the Reserve Bank of Australia and economic activity in the industry from United States. On Wednesday, the Bank of Canada will release its interest rate decision, which should create some volatility in the Canadian dollar. On Thursday will be the interest rate decision from the Bank of England and the ECB. On Friday, the main numbers will hit the market are unemployment rate from United States and Canada. Monday may be a little quiet due to the public holidays in Canada and United States, but we may see some economic activity in some other countries. In Asia, we have the release of index of business activity in China's PMI from HSBC. In the past few months, this number has remained about 50, keeping traders bullish about the Chinese economy. There will be also the release of statistics for index of business activity in the UK PMI industry. Since the start of 2014, this number has not dropped below 55. But this time, the number may disappoint investors as the UK economy is not moving along well at this moment. Tuesday will be interesting with the release of the interest rate from the Reserve Bank of Australia. Since August 2013, this rate has been held at 2.5%, which is the lowest in the last 14 years. And as usual, on direct line with us, Andrew Masters, an expert and investment analyst of FIBO Group. Welcome, Andrew. Can you comment on the interest rate of the Reserve Bank of Australia?
Hi, I'm Andrew Masters from FIBO Group and welcome to my report on Australian monetary policy. The Reserve Bank of Australia will meet again on September 2nd and it's widely anticipated that they will keep rates on hold at 2.5%. The last time the RBA moved on rates was in August 2013, when they dropped the rate from 2.75 to 2.5%. It's an unusually long time to keep rates on hold, and signs from the RBA suggest that rates will remain where they are for some time. Few analysts believe that there is any scope for a rate rise, and there may even be an argument then to fall further. The RBA has given itself flexibility to cut rates following its downgrading of GDP growth from 3.25 to 3%. Another catalyst would be if evidence appears of weakness in consumption growth, as well as further softening in commodity prices, which have been in a downward spiral for some time. The Australian dollar, which has consistently traded above 90 US cents this year, is causing concern for the central bank. RBA Governor Glenn Stevens has mentioned that the currency is overvalued and by more than a few cents. A strong currency, which is positive for importers, is not so welcoming for exporters and those operating in the manufacturing sector. Low interest rates have also boosted the property market in Australia, as home prices rose 1.8% in the second quarter and 10.1% from a year earlier. Although the RBA will keep rates on hold next week, traders will be looking for signs from the bank about when they actually plan to move on rates. They noted in their last meeting that the economic outlook remains uncertain because of conflicting forces at play, and it will be interesting to see if they take the same stance at this meeting. The persistently high Australian dollar is also likely to be on the agenda, and it's possible the RBA will take some steps to tackle this problem.
Thank you, Andrew. Finally, we have the release of business activity from the United States. Since the start of this year, the number has been growing strongly, which shows an increase in manufacturing activity throughout the year. Middle of the week will be interesting due to the quarterly value of Australia's GDP, which has so far been growing solidly. A good number really has the ability to strengthen the Australian dollar. This afternoon will be influenced by the interest rate decision from the Bank of Canada. Since the beginning of 2010, this rate has remained steady at 1%, which has kept the Canadian dollar strong against the US dollar. Thursday will kick off with the index of retail sales in Australia and the interest rates of the Eurozone, the United Kingdom, and the press conference by ECB. The Asian session on Thursday will focus on retail sales in Australia. This number is tied to the inflation rate, with a high degrees of importance. July's number was disappointing for investors, so they will be looking for a positive number in August to show growth in consumer confidence. The focus on Thursday also will be the interest rate decision from the United Kingdom and the Eurozone. The rate of the United Kingdom starting from 2010 kept at 0.5%. Thereby, it motivates the economy to growth in the long term. In addition, a few times was the issue of growing the interest rates from the regulator on the background of economic growth in the United Kingdom. Therefore, attention from the market can be quite high. The next release will be the interest rate of ECB. If the number remains at the same level, it may add the downtrend of the euro against the US dollar. Later in the day will be the ECB press conference with a statement on monetary policy, which could create a high volatility in the euro. The end of the week will be interesting with the release of unemployment rate in Canada and the United States. The unemployment rate in Canada and the United States has been steadily declining for the last few years. If this trend continues, it should be positive for the United States and the Canadian dollar. So, to sum up the trading week, we can expect a lot of volatility as a number of important indicators hit the market. There may be a lot of trading connected with the phrase buy on rumor and sell on the fact. So thank you, have a profitable trading and wonderful week.